$1,000 might not seem like much, but it's the perfect starting point for building real wealth. The wealthy know, it's not about the amount, but how you use it. Most people waste their first $1,000, letting it sit in a low-interest account or spending it on things that lose value instantly. That's not how you build wealth. In this video, I'll show you 5 smart ways to invest $1,000 in 2025. Whether you're a total beginner or already on your financial journey, we'll cover hands-off strategies, a few that require more effort, and the safest, most overlooked option at the end. Stick around. Your first $1,000 could be the start of your fortune. Let's dive in. Let's start with my favorite beginner strategy, index funds. An index fund is a basket of hundreds of companies, like the S&P 500. So you're not betting on one winner, you're owning the whole market. This gives you instant diversification and reduces your risk. Open an account with a low-cost brokerage like Vanguard or Fidelity, deposit your $1,000, and search for an S&P 500 index fund. VOO is a popular choice. With a few clicks, you're a part owner of America's top companies. Fees are extremely low, often less than 0.04% per year. The market will go up and down, but historically, the S&P 500 has averaged about 10% annual returns over the long run. The key is to think long-term and avoid emotional decisions. You don't need to watch the news or time the market, just keep adding what you can, when you can. This is called dollar-cost averaging, and it helps smooth out your returns. Even Warren Buffett recommends index funds for most people. If it's good enough for Buffett, it's a solid choice for your first $1,000. Index funds are the ultimate set-it-and-forget-it strategy. You get diversification, low fees, and a proven track record. You're not gambling, you're owning a slice of the entire economy. For most beginners, this is the smartest, safest way to start building wealth. It might sound boring, but boring is what makes you rich. Start here, and let time do the heavy lifting. That's how fortunes are built. Next up, high-yield dividend ETFs. Like index funds, ETFs are baskets of stocks, but these focus on companies that pay you cash dividends. With a high-yield ETF, you earn money 2 ways. The fund's value can grow, and you get regular dividend payments. Reinvest those dividends, and your money starts compounding. Dividends earning more dividends. Over time, this snowball effect can seriously boost your returns. Popular options include Schwab's SCHD or Vanguard's VOIM. These hold stable, dividend-paying companies like Coca-Cola and Johnson & Johnson. It's a great strategy if you like seeing regular income from your investments, even if it's small at first. You'll need to do a bit of research to pick the right ETF, but it's still mostly hands-off. If you want growth plus a steady stream of cash, high-yield ETFs are a powerful way to put your $1,000 to work. You get diversification, potential appreciation, and a growing income stream. It's a smart, simple way to accelerate your wealth. Let your money work for you, every quarter. Ready for more risk and potentially bigger rewards? Consider individual stocks. This isn't for everyone. Picking stocks means betting on specific companies, so you need to do your homework. Don't gamble on hype or hot tips. Instead, invest in businesses you understand and believe in for the long term. With $1,000, diversify by splitting it between 2 or 3 strong companies in different industries. Think Apple, Costco, or Johnson & Johnson. Use a brokerage app to buy, but spend time researching. Read annual reports, check financials, and know what makes the company tick. The market is emotional. Don't panic if your stock drops short-term. If you believe in the company, dips can be buying opportunities. Avoid chasing trends or buying at the peak. Look for great companies at fair prices, and be patient. If you enjoy research and can handle volatility, individual stocks can offer outsized returns. Just remember, diversify, invest in what you understand, and never risk money you can't afford to lose. It's hands-on, but for the right person, it's a powerful way to grow your capital. Think like a business owner, not a gambler. Be disciplined, and you could see your $1,000 multiply, but always know the risks. The best investment? Yourself. Use $1,000 to learn a new skill or earn a certification. Think digital marketing, project management, or coding. Sites like Coursera or Udemy offer affordable courses that can boost your income potential. Or, use the money to start a side hustle. Buy tools, software, or equipment to launch a freelance gig or small business. The return on investing in your skills can be massive, far more than any stock or bond. Skills are yours forever. No market crash can take them away. The more you earn, the more you can invest in the future. Before you rush to the stock market, ask what skill could unlock a higher salary or new income stream. Investing in yourself is the foundation of all wealth. Don't overlook it. Don't. Want safety above all? Consider bonds and high-yield savings accounts. High-yield savings accounts, HYSAs, from online banks pay much higher interest than traditional banks, sometimes 4% or more. Your money is FDIC insured and always accessible, perfect for emergency funds or short-term goals. Bonds are another safe option. When you buy a bond, you're lending money to a government or company in exchange for regular interest payments. U.S. Treasury bonds are among the safest investments in the world. You can buy bonds directly or through a bond ETF for instant diversification. Bonds often perform well when stocks are down, adding stability to your portfolio. If you can't afford to lose your $1,000, these options offer peace of mind and steady, predictable returns. They won't make you rich overnight, but they're a smart foundation for your financial plan. Safety and stability matter, especially when you're just starting out. Build your base, then take more risks as you grow. Sometimes the safest move is the smartest. So, how should you invest $1,000? Here's the recap. For simple, long-term growth. Index funds or ETFs, for more risk and research. Individual stocks, for guaranteed progress. Invest in yourself, for safety. Bonds or a high-yield savings account. The best strategy depends on your goals and risk tolerance. But the most important step is to start. Don't wait for the perfect moment. Take action now, and your future self will thank you. Let me know in the comments. How would you invest $1,000?